With the mandate just around the corner, the Belgian tax authorities released new additions to their e-invoicing FAQ, providing further guidance on the upcoming mandatory e-invoicing regime. The authorities have confirmed there will be no postponement of the 1st of January 2026 deadline. One key insight from the FAQ is that Hermes will be discontinued on the 31st of December 2025. Businesses using Hermes might have to migrate or will have to migrate to an alternative system through their PEPL service provider. The DG FIP extended the deadline for mandatory certification of POS, point of sale, and cash register systems by accredited bodies to September 1st, 2026, 6 months later than the previously planned date of March 1st, 2026. Self-certification is no longer accepted, only certificates issued by accredited bodies are valid. Software publishers must apply for certification and provide the certificate to users who must retain it for inspection. Additionally, AFI opened the qualification environment of the PPF. Registered platforms have until the 14th of January 2026 to conduct interoperability tests with other platforms and with the PPF and submit the corresponding test reports to the tax authority. France is another country that keeps on giving this month with the draft finance law for 2026, introducing a framework for the generalization of e-invoicing and e-reporting. As mentioned, it is a draft and it is to be confirmed following adoption. Key measures include the confirmation of the exclusive reliance on certified private platforms, a central national directory for the correct invoice routing, Chorus Pro remaining the mandatory solution for public entities, amongst many more updates related to penalties. Finally, the DG FIP published version 3.1 of the external specifications for the PPF. This new version consolidates all of the updates since version 3.0 and formalizes technical expectations for the start of the reform. The documentation also includes the external specifications for Chorus Pro, the reference platform for B2G e-invoicing. Ireland's Revenue Commissioners published details on the country's preparation for the implementation of the VIDA directive following Ministry of Finance Pascal Donohue's Budget 2026 statement. Revenue announced a phased national rollout for e-invoicing and real-time reporting obligations. Phase 1, November 2028, mandatory for VAT-registered large corporate entities for domestic B2B transactions. Phase 2, November 2029, extended to all VAT-registered businesses engaged in cross-border EU B2B trading. And Phase 3, July 3rd, 2030, applies to all cross-border EU B2B transactions. From November 2028, all businesses must be able to receive e-invoices, even if not yet required to issue them. The Malta Tax and Customs Administration is preparing to introduce e-invoicing and real-time reporting systems as part of its digital transformation strategy under the MTCA Strategic Plan 2023 to 2025. The pre-budget consultation document highlights Malta's alignment with the EU's VIDA initiative. It's the country that keeps on giving. Mexico's 2026 Paquete Económico introduces an ambitious plan to revolutionize tax oversight of digital platforms. The proposal would require platforms to grant the Mexican Tax Authority, SAT, real-time continuous online access to their systems, enabling live monitoring of transactions and data flows. The proposal would take effect on the 1st of January 2026, however, is pending congressional approval. New Zealand's 5th edition of the Government Procurement Rules introduces new measures to boost e-invoicing adoption and support small businesses. Large suppliers must send e-invoices to government agencies from the 1st of January 2027. Suppliers must pass on equally favourable payment terms in their subcontractors on government contracts. The Bureau of Internal Revenue, BIR, extended the deadline for covered taxpayers to comply with the issuance of electronic invoices to the 31st of December 2026. A draft regulation amending the Minister of Finance's decree on the detailed scope of data in VAT declarations and records introduces 3 new mandatory markings for invoices that should normally include a KSEF identification number but do not have one at the time of submission. OFF, off, to be used for issuing invoices during a KSEF system failure. BFK, to be used for electronic or paper invoices issued outside of the national e-invoicing system. Additionally, the Polish Ministry of Finance made the test environment for the KSEF 2.0 taxpayer application available, allowing users to explore the functionalities that will be available in the production version. The 2026 state budget proposal introduces measures impacting e-invoicing and digital reporting compliance, specifically around SAFTI accounting, e-invoicing PDF acceptance, and inventory valuation communication. To highlight, it is a proposal, but if accepted, invoices issued in PDF format will continue to be considered valid electronic invoices for all fiscal and legal purposes until the 31st of December 2026, meaning qualified electronic signatures will be then mandatory from the 1st of January 2027. Additionally, the submission obligation for the SAFTI file relating to accounting would then apply to fiscal year starting in 2027, with the first submission due in 2028 or later. Serbia's Ministry of Finance announced new updates to the rulebook on electronic invoicing. The latest amendment refines provisions on electronic VAT reporting and corrections. It also introduces an optional feature allowing the exchange of recipient notifications regarding previous tax within the SEF. Slovenia's National Assembly adopted the Act of the Exchange of Electronic Invoices and Other Electronic Documents. The legislation establishes a mandatory e-invoicing regime for all B2B transactions, aligning Slovenia with the EU's VIDA initiative. The effective date is the 1st of January 2028, with mandatory electronic invoicing for all B2B transactions. Paper invoices will no longer be accepted. The law was forwarded to the National Council on the 24th of October 2025, and it will enter into force after being signed by the President of the Republic. Tech UK and a coalition of leading businesses and fintech associations have published an open letter to the UK Secretary of State for Business and Trade calling for the phased introduction of mandatory e-invoicing for VAT-registered businesses. It was also noted that MTD should be leveraged as an attempt to minimise burden.